Hey everybody, Geoff Beers here. Jumping on here real quick on a Friday. I do want to organize these live streams a little bit better so that I'm not always just popping in. But Friday looks to be the day that I'm going to be able to do most of this. I'm also working on a better camera technical setup. But in the short term, we are here. Today is June 5th. And we're going to take a look at some of the stock market news. And depending on who wants to jump in, I'll try to answer some questions while I'm at it. So let me just get my setup here in a good spot. And the big news today was, of course, the unemployment numbers. Macy's biggest job increase ever of 2.5 million, which is absolutely amazing. I did see that some people, if you got really granular on the report, there were some folks who were commenting about it on other boards that, depending on how you do the math, it may not be as good as it sounds, but the key points, obviously, non-farm payrolls rose by 2.5 million. Wall Street estimates Wall Street had estimated a decline of 8.3 million. So the fact that it rose is pretty big. Much of the gain came from those classified as temporary layoffs due to the coronavirus. So furloughs and stuff like that. Sounds like people are getting back in the game. And then this is your big one, in my opinion. Leisure and hospitality represented almost half of the jobs gained. So, restaurants, hotels, travel, these are the ones that have been hit the highest. And now you're starting to see some of those people come back on into their jobs. So this is really good. It also bodes pretty well for all of those travel stocks. If they're hiring again, then that leaves you to believe that the revenues are starting to come back in as well. So really good news there. I was, as usual, hoping for an opportunity to buy today. And if you look at Yahoo, you have S&P up 2.4%, Dow 30 up 3, NASDAQ 1.78. So not a lot of opportunity, in my opinion, with these prices running the way they are. However, if you dig deep into your stocks, I think like the best thing, or what I'm trying to do anyway right now, is just try to manage on like a cost basis scenario. So if you have any dogs in your portfolio that you're going to hold for a long time, then maybe you can try to add in that situation. But nobody's going to argue that cash in this environment seems like the best way to go. Certainly paying off debt would be another big one. So if you have those things that are hanging over your head, then it's probably a good time to try to take care of them. I'm looking in my realm as far as dogs that I have. One that I don't talk about very much is TAP, which is Molson Coors. This is what I would call a love stock, so to speak, because I drink a lot of Coors Light, and that's my favorite beer, and I have for a long time. So some time ago, maybe 2 years ago, I invested in TAP, and I'm telling you, when I say dog, this thing, let's just say it was 2 years ago, which would have been June of 18. Came in at 68, downward spiral ever since. Obviously, we know that the beer industry has changed. It's just flat out changed. There's the craft beers that are, taking little nickels and dimes out of the market share for the big players. And then you've also had this switch to hard liquor or spirits or whatever you want to call it. And then you get into the things like the, I forget what they're called, but like the White Claw that they have out there. Coors has been late to the game across the board. They recently released Vizio, sounds about right. Vizzy, which is right here. So they are playing catch up, as this headline says, and we will have to see if that is going to work. They certainly have the size and the budget to push something like this. But what's interesting about Coors is that they just continue to make the weirdest plays in the marketplace, and it's almost a little embarrassing that I've chosen this stock to invest in, but like I said, it's a brand favorite for me. So I'm, trying to make a little bit of a dividend off of stuff I do anyway. But what happens with Coors almost every time is they're late to the market, as they were with this hard seltzer. They make oddball decisions on how to enter markets. So with Vizzy, for example, not only were they late to the game, their angle was this Vizzy has some antioxidants and some vitamins or something in it. So they're banking on some health messaging, to drinkers, however that works. And they're hoping that it sticks. Then they're going to take the Coors brand and do a Coors seltzer. That's a couple months-ish away, if not a full quarter away. And so, they had something with all their brands that they could have come out with a brand name and done the seltzer. Instead, they created a new brand. Not really sure if I agree with it all, but this is where we are. On the bright side of Coors, you have some things that are working. The Blue Moon brand has a very light summer-esque beer that seems to be doing very well. And then you have, Miller Lite, MGD, some of these other ones that if you're going to buy in on the sort of unemployment, lower income game, then you would assume that lower cost alcoholic beverages may resonate. I'm hoping that that's the case. I'm trying to add for basically the final time in and around $40. Was actually going to pick up a couple today, but I'm not going to do it at 43. Maybe I'll regret that. And when I look at the valuation over time, it doesn't give me a lot of strong signals. Trailing PE is higher than it has been the last several quarters. There's a lot that goes into that with Coors. Forward PE, however, is at a manageable range, right? So I wouldn't call this stock on sale, but I would say manageable range for forward PE. Price to book is actually a little bit lower, and that's because growth is projected, to be not so great, and price to sales is a little bit lower. So it's an okay time to buy it, and my cost basis is in the 50s somewhere. So I'll have to think about it. They did cut their dividend. They've got some debt going on big time at $9.59 billion. I don't think that they're going to be a company that has trouble with that, but it is going to affect them. Cutting the dividend in the short term will certainly help. But at the end of the day, it's a sales game. They have to sell more product, and I'm hoping that things turn around. All right, so I'm looking at Pratik coming in here. So I'm going to post his question. Hey, Pratik. Hello, strong believer of Genus to do good in the long run. Short traders make it volatile. What are your thoughts? I have to look that one up. So let's go over Genius Brands. Actually, I did study this a little bit, but I need to pay more attention before I comment. I'm looking for here we go. Genius Brands, content, brand management company, multimedia content for toddlers to tweens. Okay, Llama. I have kids, so I know some of these. Thomas Edison, Secret Lab. Okay, so you're in the kids content game, and one of the things that we should see is just how the valuations are going. Obviously, people are at home. Toddlers are at home all the time, with or without schools. And this company is not profitable yet, which is fine. A little bit of uptick here in price to sales. Well, relatively big uptick. So it looks like things were going pretty good. September through December, even into March, and then whatever happened with the coronavirus, this price to sales jumped pretty high, as well as the price to book. From balance sheet, we got $5 million coming in over the past 12 months and $10 million in debt with 600 cash on hand. I think the big one here is distribution. I know off the top of my head that Llama Llama made it over to Amazon. I don't know how that's going. Let's see what Motley Fool says. In short, sharp reversal is a result of Security and Exchange Commission's filing disclosing a group of investors registered to sell as many as 60 million shares. So it sounds like the insiders are selling at a pretty high rate, and that's what's going on here. Now what? After the massive run-up in price, some investors are looking to cash out. Management is putting that cash to work in new properties, including Rainbow Rangers, cartoon channel, new line of Rainbow Rangers. Too early to tell how the recent run will prove. So I think what I gather out of this quick assessment, Pratik, is that you have some good stuff coming out. Anytime the investors sell at such a high proportion, you're going to have people freak out. So you're suggesting that you're good in the long run, which, kind of gets you out of this loop of what's going down today. I wanted to bring it up on Tip Ranks for you to see what those analysts are saying and see if we can get any more details. And it was GNUS. Running a little slow. No analyst ratings right now. However, I wanted to see if and they haven't caught up to the insider trading stuff either. So this one's hard to see. Not a lot of visibility in here, but I see that on MarketWatch. Let's see what they can figure out. Genius Brand stock has still run up 176% this week. There's really no even story here. That's a weird one. That's just a headline. I would say if this was me and I was in it, and I believed in these Rainbow Warriors and toys coming out in Walmart, and the fact that at any given day they could sign a distribution for these shows, I don't think it's bad. I mean, I think media is changed dramatically, and smaller players like this can poke themselves into there. But it's hard for me to see exactly what's going on. It's amazing how little information that is out there on it. I wanted to go back to Yahoo for a second and take a look at, let's do a 1 year. So you had a big run up, and then you had a little tick down as people sold. It's still relatively high, right? Compared to the 52-week range. I think you're at a high point. I don't know if I'd add more here, considering the volatility. I don't know if I'd add more here, but if you bought in at, say, $7.93 or some version of that, $6, and you're in it for the long term, then I don't think you have that much risk. So hopefully that helps you think about it a little bit, but that's all I've got on that one. All right. And now I'm going to turn the tables over to another stock that's on my watch list right now, looking to get into, and that is Visa. So I was waiting to accumulate some capital to start my position in Visa. It's been a costly time to wait because, as you see, since the crash, it has been ticking up and up and up and up. It was at a high of 211. We're currently at 198. And I would say Visa, from a long-term perspective, is still in a good spot relative to how high stuff is getting in the market. Trailing PE at 35. And you see over the past several quarters, that's, give or take where it's been, sort of the high side of where it's been over the past several quarters. Forward PE slightly higher than where it has been. PG ratio is about flat. Excuse me, it's about flat. Price to book, roughly flat, a little bit on the high end. So what I will say about Visa as I'm watching it, today is a crap day to buy it because the market ran up so high. I personally don't buy on these big green days. I try to buy on red days, as I've shared before. I do not want a software scan right now. But Visa's on my board, and it doesn't look like a huge monster deal right now. But I think in the long term, if you believe Visa, and I've done a couple videos on it, they are doing really awesome things on the back end, like from an API standpoint, from a sort of distribution and integration standpoint. That's where the win is. And now that we're heading into summer, I don't know if they'll comp their summer as well as they did last year, but I think that they are in this kind of revival period. So that is Visa. And Junior Stock Investors long Visa, so I'm with him. Got a question from YYKK. How about Hertz? Well, that's a tough one. Let's see where they're at. I think that this is a government, it's not an official bailout, right? But I think that, don't quote me on this, but I do think that the government is buying some of Hertz's bonds. You're down to $3. The 52-week range has been as low as 40 cents somehow. I don't even know how. That's not even showing on the chart. I think you've got a lot of risk, but with risk can become, good returns. I just don't know how much they need to bounce back in order to be sustainable. And that's really the catch for me. Trailing PE not available. Forward PE looks like, it's about what it has been doing. But a lot of this stuff here is almost so low that it doesn't make sense. Let's see how bad stuff is. Revenue over 12 months was $9 billion. So that's obviously a nice figure. Cash on hand, $500 million, and debt is $19.7 billion. So they got a huge debt load. You've got a competitive industry in rental cars. And I guess the way I would go about this, if I was going to invest in it, is I would take, I'm looking off to the side here, I would take this Avis group that has a reasonable P ratio of 14.2. And I would compare them line for line in their investor reports and everything else. If you're buying into Hertz because you think it's a downtrodden stock and that the rental car industry is bound to bounce back, I agree that the rental car industry will eventually return into normal. Can you mimic, though, the returns that you expect in Hertz by playing it slightly safer, assuming that Avis is a solid company? Now, you see Avis's run up here, right? You were at May 18th at $14.75. It's basically doubled in price, and it went up 12% today. So that would be more or less the kind of company that I would invest in if I had a rental car thesis. is I would have been watching Avis as a fundamentally strong play, so to speak. Looking in around here at 12, to $15. And as soon as I thought that the rental car industry was about to pop, or I saw the stocks go up, then that's where I would have made my gains. And that would have been, hindsight is 2020, but to me, that would have been a better play than Hertz. So, that's my opinion. Doesn't mean Hertz is the worst thing ever. Okay, Harry Shepard comes in. What are your thoughts on Gannett? At one point today, it was up 130, now sitting at plus 100. So is Gannett still all newspapers, or have they expanded? Obviously, they have the online channels now. And let's see what they're doing for the year. They're down massively for the year, but to your point, Harry, they did just jump up. I don't see any news on this either. Sometimes if you go to this conversations tab on Yahoo, you have some people who share their little tips. And I'd have to read through this, and I don't want to bore everybody. But it looks like this, I'm just a rookie, but got in yesterday. This is spammy on somebody's, pushing some sort of guru thing. And so I don't know. I don't know why Gannett went up. And I would take a very hard look at their digital properties for the future. And I would look at investor reports and see what is the plan. If we go back to February, they were $6 before the crisis. I would imagine that internet traffic for a news organization has jumped, out of this world over this pandemic and the other things that are going on. So if they're into ad revenue on the digital side, maybe they made something. I don't know. Ad revenue has been hard for a lot of people to calculate, because even though more people are online and the audience is very focused, other people have slashed their ad budgets. So I don't know. I didn't get to answer your question, Harry, because I don't see the news either, but hopefully I shared a few thoughts in there. Okay, so let's go back to the homepage, see what's going on. Any new news? Shocking jobs report. We already covered that. DraftKings is another one that I've been enamored with here lately. My new goal on DraftKings is to snag it under 40. It looks like it's going to settle in the $40 range, for the next few months until football and some of these other things get going. And it was there yesterday. I missed it. I missed under 40. But it's hovering around there today. It looks like some of the shiny object syndrome and the FOMO with DraftKings is starting to bail a little bit, which is fine. It was going way up. I think I'm in at 38-ish, something like that. I'll still buy at 40, and I'll still buy all the way down for this one, just because of the growth opportunity, namely with mobile gaming and mobile betting coming to fruition. If you follow any casino stocks, you would have seen that the casino stocks are all up now because the Vegas opened. I was trying to see if there was a comment about that, about casinos opening. I don't see it, but it is. They're opening on Vegas, and let's see what MGM says here. So they're going to start making money. Now, the question is, can they make anything like they used to make in the era of COVID? That's going to be the hard part. So there's this sort of like 90% theory. I was watching some guy on YouTube last night. I thought he had a really good theory of saying that the economy, you know what? It was The Economist. The Economist had some 8-minute video, if you want to go look it up, about how the economies will recover and so on and so forth. And their assumption was that they would get to 80 to 90% capacity by the end of this year. So obviously that's good. The downside is that's minus, 10 to 20% from the year before, and depending on what your industry is, it's even more, right? So I would assume that restaurants will not return to 80% capacity. I will assume that they bump up 60%, right? So that's where you have to start measuring the projected revenue to figure out where are things going to land. Anyway, that was a little sidebar. I'm going to go to Josh B. Google at its current price. I'm a big Google fan. Let's see what we're looking at. I'm actually going to be doing a Google update here soon, Josh. I've been trying to go through some of my more popular videos, like I did Microsoft this week, and just said, okay, the pandemic's come and we're starting to crawl out of a rock. Where do things stand today? I will have a Google one. Their high on February 19th was 1524. They're at 1430. So they certainly lost some revenue. Advertising revenue during this time. Nobody knows for sure how much, but their trailing PE is just a smidge higher than it was. And forward PE is up considerably more. If you're in Google for the long term, I don't know if any of it matters, right? I think that this is a fair price for a 5-year hold without even digging too far into the numbers. Because you get down here and you start to see total cash, right? $120 billion versus debt of $15 billion. Google has the cash potentially, if they decide to start buying other companies and building their revenue. I don't know how aggressively they will do that, but there is an opportunity. They bought Fitbit recently, and I saw that Fitbit came out with some sort of respirator. So they're starting to expand their capabilities under Google's watch because there's endless amount of money to screw around with stuff like that. So Google under 1500, not bad. Why not? Now, the other side of Google is if those lawsuits and fines come into play, they're back under the eyes of the government. And here it is: Google search a target of U.S. antitrust probes. So we've sat through that crap with Facebook before, and the end result was like something ridiculous, like a $5 billion fine, which is a ton of money. However, Facebook paid that fine out of their cash. And if Google got a $5 billion fine, I just showed you they had like, $120 billion in the bank. I don't know that it matters. Like, I really don't. Like, that's what's amazing about these Amazons and Microsofts and Googles. Take them to court. You'd have to wonder if they wouldn't just be inclined to settle for $5 billion, skip the court, and move on with their life. I probably would. I don't know if it's that easy because every congressman wants to get this, trophy on their desk that says I took down Google. It's not going to happen. But Google could be facing a big fine, and it sucks because the news headlines are going to be super negative for Google over the next 3 or 4 months from a political standpoint. However, if advertising revenue returns back, then you throw in YouTube, and I just don't know if there's a better internet stock outside of Facebook that's worth owning. Whoops, I think I closed my window. There we go. Okay, so I'm going to do... I just started. Can you send Sandra Johnson? I'm with TD stock. I just started. Can send me a stable stock that is low to make money now. That's tough. I'm not the guy for that because I hold long. Typically, Sandra. So I don't have one for you. If you want to know what people are been the happiest about investing over the past, call it 3 years, you'd have to consider Microsoft. But if you were my son or daughter or something, I would tell you to buy the QQQ NASDAQ Top 100 Index Fund and hold it for a long time, and you'll probably do pretty good. Junior stock investor, do you feel like Facebook is a great long term? Yes. Long. They have a great balance sheet. The only thing that they're going to have to do in the long term, long term, is just continue to add to their properties, which I have no doubt that they will. You're looking at, Instagram probably has another couple years before it turns into like Facebook, where it's just old people like me on there. And then I think that the not the Messenger, but the WhatsApp, I think that has a long lifespan just by the nature of its usage. So hopefully they can monetize that well. Somewhere along the line, they're going to have to do a I don't know if it's TikTok. I don't know if TikTok's the answer. I'm not a TikTok guy, but they're going to have to buy another Instagram. And I have no doubt that they will. But they're going to have to keep inventing, because Facebook and Instagram over 5 years is not going to be the ultimate game. And Facebook knows that. They're not hearing anything different. Internally, certainly they don't really care what I have to say, but that's my take. All right, guys, short one today. I did want to hop on a Friday. Just know that this employment news is very positive. The market ran high today. I wouldn't buy anything today unless you've got a huge conviction on it. And we're just going to have to wait to see if there will ever be bad news again to help us come in and at least save 3 to 5% on some of the prices of these stocks. I'm not sure if it's going to happen, but in the short term, I'm holding cash. So that's my take. I got the sort of cash on the sidelines thing, and I'm looking for better prices. Sometimes I get bored and I buy something that I'm going to hold for a long time. But otherwise, I'm standing pat and just doing analysis and waiting for the next thing. On my way out, I'm just going to say hi to Brian, and Redfin and Zillow are both, I think that's right in my wheelhouse of stocks that I think have very bright future. Redfin, I think, is fundamentally the better play on numbers. However, I personally prefer Zillow, and so I have Zillow through an ETF. I believe it's the ARKW ETF. So I'm higher on Zillow because I'm familiar with it. I understand it, but I think right now Redfin has better fundamentals. So probably depends on where you live. And here in Ohio, I've never heard anyone use Redfin, but everybody's got their freaking Zillow reports on their house, and they're trying to see how much stuff's worth. So that's my take, Ryan. Thanks for joining today. Thanks for everybody for joining today, and the recording will be up as soon as YouTube processes it. And I will work hard to start scheduling these on a more normal cadence. So thanks, everybody. Thanks to all my subscribers. Thanks to everybody. This is a super small channel. I have a lot of fun doing it. And it's, you guys are the reason that I do it, because it's just fun to talk stocks with you. So have a great day, and we'll see you next week.